Good morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's the midweek and the markets have been fairly range-bound so far. While we saw Monday was good, but yesterday we again saw some selling pressure and Nifty has, as a result, slipped below that 24,700 mark. But yes, the tariff uncertainty continues, and just a day ahead of the August 7th deadline for all the tariffs to go into effect, which is tomorrow itself. So US President Donald Trump's tariff rhetoric has continued. The slamming on India's buying of Russian energy continues. But this time when he was asked whether he would impose 100% tariffs on countries buying Russian crude, the answer was that he hasn't really specified any tariff range as of yet. And even when he was asked about the US buying Russian minerals, he said that he wasn't aware of it and he'll get back with some details. So now this is clear double standard when it comes to trade front. But yes, the tariff uncertainty and definitely on the pressure on India continues. But yes, the markets doesn't seem to be appreciating all of this. Even when you look at Asian markets in the morning, they have been mixed. US markets were once again lower, and the trends for us also point to another negative start as per GIFT Nifty. But yes, now today we'll also be having an all-important RBI policy outcome where consensus does indicate for a dovish pause. But what the Governor Sanjay Malhotra's commentary would be on inflation and growth outlook amid all of this tariff uncertainty and for how it would look like for the rest of the remainder of the year is something that we would watch out for. But given that we are into the earnings season, we'll watch out for more earnings reactions. Britannia Airtel coming out with its first quarter performance. We'll discuss all of these stocks in today's session, and of course your stock related queries as well. Keep them dropping and we'll take them up in a bit. Now before we delve deeper into the show, let's take a quick check of the top headlines this hour. US President Donald Trump said that he never specified any percentage when was asked about whether he would impose 100% tariffs on countries buying Russian crude oil. This after he said that he will increase India's tariffs substantially in the next 24 hours, accused India of fueling Russia's war machine, says India offering them zero tariffs is not enough. New Delhi calls targeting of India unjustified and unreasonable while they take measures to protect national interest. Government sources say India is not the tariff king as claimed by Donald Trump, cites data from WTO that shows average weighted tariff rates are lower than Vietnam, Europe and Bangladesh. Wall Street indices pull back as investors digest weaker than expected economic data and new tariffs, comments from Donald Trump. Asian markets start mixed and the GIFT Nifty is indicating a marginally lower start for Indian markets. The RBI MPC will announce its interest rate decision today. Street is divided between rate cut and a pause but hopes for a dovish forecast. At least 4 people have been killed and several others remain missing after a cloudburst in Uttarkashi district. Personnel from Army and State Disaster Response Force have rescued over 50 people overnight. Yes, like I was talking about that, yesterday's session was quite a wobbly one because we did see that the market closed with minor cuts and the trimmed. However, in the last hour or so, it did trim some of its losses. But eventually, Nifty settled below that 24,700 mark. And the major contributors to the decline included the likes of the index heavyweight, that is your Reliance Industries and the banking stocks. Broader markets, they continue to remain under pressure. Midcap index down about 0.4%. And financials, like I was mentioning, they were the biggest track. ICICI Bank and HDFC Bank, both of them slipped in the trade. However, what did well was the auto stocks because they continued to move higher. We did see some of the July sales data and some of the expectations of the festive pre-buying also kept them on a higher note. But yes, 2 major auto stocks which will be reporting its first quarter results today. Bajaj Auto and MotoCorp will be keeping a watch out on them on how the results fare. And of course, the all eyes on the RBI policy decision. Consensus is seeing a status quo of the policy, but dovish pause is where markets are watching out for. Now, dovish pause, ideally, it means that, they don't cut for rate cuts as of now, but they're hoping that it will happen for the remainder of the year. But yes, the commentary on RBI's growth outlook, which will be watched out also because the transmission of rates are still not into effect yet. But yes, the tariff uncertainty continues. So whether or not there could be some liquidity infusion, how the banking stocks and how the rate sensitive stocks react today is something that we would be keeping our eye out for. Now let's move on to something that we did see in the primary markets. NSDL listing today, all eyes on the big listing because we did see that the IPO got subscribed by a big about 41 times that we saw for the IPO subscription itself. But yes, coming to the fund flows data, FIIs continue to remain net sellers, 22 crore rupees in equity markets they've sold in the last session, and DIIs they were the buyers with about 3840 crore rupees in the cash markets. Nifty put call ratio that has dropped to about 0.83 from 0.94 levels, and the stock that continues to remain in the F&O band, that is your PNB Housing Finance. So yes, all in all, we are looking for a muted start of the markets given that the global cues have remained largely unsupportive too. But yes, the RBI meeting, that is something that we would be watching out. In just an hour or so, we'll be getting RBI governor's comments on how the growth would look like. But as of now, pre-open rates indicating a subdued start for the markets once again. But on that note, let's quickly get on board with the technical expert of the show. Joining me is Nilesh Jain, Head VP Derivative and Technical Research of Centrum Broking. Nilesh, Nifty once again below that 26,700 levels. Can we expect a further down move, or how does the setup look like ahead of the RBI's policy outcome?
Morning, Lovisha. Absolutely. So yesterday we saw some bit of consolidation where the Nifty faced resistance at 24,700 mark for the fourth consecutive session. So looking at the overall setup, we are expecting market to remain sideways, and Nifty is likely to oscillate in the broader range of 24,500 to 24,800. So that's the broader 300-point trading range for the Nifty. The strategy should be buy and decline. If at all we see any dip towards 24,600, there the risk and reward will turn favorable for the long position. But as of now, one should ideally wait for the event to span out, and post RBI policy will get a better clarity of the market. But as of now, looking at the pre-opening, looks like we may see a muted opening, and Nifty from intraday point of view looks like likely to oscillate in the range of 24,550 to 24,700. Now we need a breakout about 24,700 for any sort of possibility of a short covering move towards 24,800 to 25,000. For that, 24,700 is an important resistance that needs to be watched out for. Now coming to Bank Nifty, yesterday we saw some bit of underperformance in the Bank Nifty compared to the Nifty index. Structure wise also, Bank Nifty is looking slightly on a weaker side. There could be possibility of a pullback. If at all we see any positive surprise from the RBI policy, then there could be possibility of a dead cat bounce towards 55,800 to 56,000. But again, similar to Nifty, for the Bank Nifty, important resistance at 56,000. We need a decisive breakout over 56,000 for any sort of possibility of a short covering move. So for the day, the focus should be on sectors and stock specific action. On index fund, we expect some bit of volatility to continue.
Some volatility is likely to continue. But yes, Nilesh, let's also talk about the rate sensitive sectors, how they look like, because autos have been doing well, but financials, they have been the major drags. So what are we expecting from banking, realty and auto pack ahead of the policy outcome?
Right, Lovisha. So as far as rate sensitive sectors are concerned, we have already seen a decent decline in last few trading sessions. All have been under pressure, realty, financials as a whole. So there could be possibility of a dead cat bounce. The major structure for the realty pack looks likely on a negative side from a short-term perspective. Autos are looking very attractive, specifically two-wheeler space. We are very much bullish on TVS Motor. Yesterday it has hit a new record high. We expect a follow-up to continue in the auto space. So auto will be in flavor irrespective of the policy outcome. I think autos are likely to do well from August series point of view.
All right. Let's take a look at the first rates coming on our screen. It's a subdued start for the markets, but Nifty has opened in the positive terrain with a positive, flat to positive bias. Let's take a look at how the other, Sensex is also up about 44 points. Very quiet start for the markets. Well, it was likely expected. We'll see how the major moves look like after the RBI announces its policy outcome. But let's take a look at how the sectors have been faring the first couple of minutes. Nifty Auto Index doing well once again with about 0.1% decline, 0.1% gains. Nifty IT Index also showing again a decline of about 0.5% itself. Bank Nifty has opened in the green, and if you look at the Nifty Realty, we'll watch out for how the rates settle in. But yes, the mid-cap and small-cap indices, both of them have been quite flat with mixed rate. If you look at small caps, they are still in the red, and mid-caps are showing a little bit of a positive bias on the other hand. If you look at is India wicks, they continue to remain at 11 odd levels at this point of time. So no major movement on that front. But let's take a look at some of the top gainers and losers on the Nifty 50. Bharti Airtel, definitely one of the top gainers with about 0.7% gains, given that it did come out with its strong Q1 results, and brokerages have largely remained positive on the counter. Shriram Finance also doing well with about 0.8% gains. Asian Paints doing well with about 0.4% gains. Maruti Suzuki and Trent ahead of its Q1 results. Trent with a gain of about 0.4%. On the other hand, if you're on the losing end, Coal India with about a percent decline. Cipla also seeing a cut of about 0.5%. Tech Mahindra, TCS, some of the tech stocks again not doing well. Even in the overnight session, we did see that tech stocks have dragged the US markets. So as a result, we can see some Indian IT stocks also not doing well on back of that, with about 0.5% decline itself. Hero MotoCorp ahead of its Q1 results today, not doing well with about 0.2% declines coming in itself. But yes, Nifty Metal Index once again holding strong with about 0.3% gains. Nilesh, what are we expecting from the metal stocks? Can we see a further up move? Because so far they have been doing quite well in this subdued market.
Right, Lovisha. So in last couple of trading sessions, we have seen a good momentum in the metal space, all the way from 9100 to currently it is at 9360 odd levels. So looking at the overall setup, we are expecting this pullback momentum to continue in the Nifty metal space towards the levels of 9500 to 9600. So these are the short-term levels. So within this space, stocks that are looking positive, first of all, Vedanta, this particular counter is looking positive from a short-term momentum perspective. We can expect a follow-up move towards 450 to 455 on the upside. With a stop loss below 426, Vedanta is a buy. It's better to wait for some bit of decline for better risk and reward. Now, coming to other metal names like Hindalco, Nalco within aluminum space, I think these stocks are also looking better at present level. So we can expect across all metal space some bit of short-term momentum to continue.
All right, let's talk about one stock in focus, that is your Bharti Airtel, because it did come out with its June quarter results. PAT was below the estimates, but revenue was above estimates and margin was in line with our performance. Net profit down about 46% on a sequential basis. Revenue was up about 3.3%, and EBITDA also did well with about 3% increase from a sequential basis itself. Margins, however, they stayed quite flat compared to the quarter ago period. But the stock has seen, a little bit of a good open with about 1.3% gains at this point of time. Brokerages also remain largely bullish on the counter, because if we see at Morgan Stanley, they've given out an equal weight on the counter, target price of about 1890 rupees. They believe that the consolidated net debt has decreased partly because of the reduction in capex and higher cash flow, which was higher than expected for the counter. CLSA has also given out an outperform call on the counter, and they believe that the leading ARPU and strong subscriber gains has been a good key drivers for the stock going ahead. But yes, the stock has seen a good run up this year. But past couple of months, the stock has been consolidating. Nilesh, how do you see the results and of course the next moves for Bharti Airtel?
Absolutely, Lovisha. The structure on technical front is looking very strong. We have already seen a good momentum in this particular counter. Although in past couple of weeks, we have seen some bit of consolidation, but accumulation was seen in last couple of weeks. After numbers, I think the stock is poised for another run up towards a new record high. 2020, 2060, these are the levels we are expecting on the upside. So it's a buy in a staggered manner. It's a good portfolio stock. Keep a stop loss below 1880, and a positional target could be somewhere around 2060. Short-term target could be somewhere around 2000. So it's a buy and decline structure at present level. Also, it can be bought. Looks positive on the chart.
Buy on decline structure for Bharti Airtel. Let's also talk about Britannia Industries, because that came out with its Q1 results yesterday, where the margins were a miss. However, the PAT was below the estimates and revenue was above the estimates. Of course, the stock has been reflecting the weaker than expected Q1 performance, down about 2% at this point of time. Brokerages have also remained quite mixed on the counter. If you look at Nomura, they've given out a neutral call on the counter because they believe that the June quarter results was weaker than expected. And the gross, and because they believe that the volumes have grown about 2% below the forecast of their 4.5% itself. Morgan Stanley also remain equal weight on the counter. They've given out a target price of 55 11 rupees, as they believe that the margins was below what they were estimating, and managing margins going ahead of the increasing competition remains a key risk for the counter going ahead as well. But yes, the stock has been down 3% past 1 month. Today also the stock is seeing a little relative pressure. Nilesh, can we expect further down moves on the counter?
Well, Lovisha, the results, I think it has already been priced into this particular counter. We have already seen back-to-back 2 days of correction, and now from here, there could be possibility of some bit of pullback because the stock is approaching towards its multi-month lowest level, and also the 100-day moving average support is placed at 5,400. So if somebody is already holding the long position, can keep a stop loss at 5,400 and stay put as of now. From a pullback perspective, I think the stock may test the levels of 5,600 to 5,700. A gradual up move is something that we can expect going forward, but as of now, looks like more sort of a consolidation. Fresh buying, ideally one should avoid till the time it doesn't take out 5,600 level on the upside. But if somebody is already holding the long position, can continue to remain in this particular stock with a stop loss below 5,400.
All right, that is the view coming on Britannia. Let's take some viewer queries dropping on our live feed. The first query coming in from Naveen. He's asking the views on Canara Bank, how it would look like for the near-term trajectory. Nilesh, any views on the counter? Because after the July peak, the stock has been declining by about 8%.
Well, within PSU banks, Can Bank, SBI, BOB continues to remain our preferred bet from a positional perspective. Now, purely from a short-term perspective, the stock has a very good support at 102. So ideally, that should be the stop loss of the long position. And we can expect a pullback towards 110. A breakout above 110 will open further upside to 115 to 118. So if bought it from a positional perspective, then stay put. If bought it purely from a trading perspective, then keep a trailing stop loss at 104. And any pullback towards 110, 111, use that pullback to book profit and exit.
Okay, book profit and exit for Canara Bank. Let's take another viewer query. Varsha Gujjar is asking the view on defense stocks, Bharat Electronics, HAL, Mazagon Dock. A mixed trade coming in. Of course, we did see that the Defence Acquisition Council has approved the defence procurement, which is worth about 67,000 crore to strengthen the border security itself. So yes, how do all of these stocks look on the counter, Nilesh, for you?
We are pretty bullish on defense pack after a recent correction that we have already seen in this particular space in last couple of months. In fact, after May, we have seen the correction which has begun. Looks like it is forming a good base formation as far as defense pack as a whole is concerned. Within this pack, we are bullish on Mazagon Dock for a pullback towards 3,100 to 3,200. It has a very strong support at 2650, so that should be the stop loss. Apart from that, other defense stocks like HEL, BDL, although today we are witnessing some bit of profit taking at the high levels, but purely from a positional perspective, looks good from a risk and reward perspective. One can buy defense counters on declines.
Okay, one can buy defense counters on decline. All right, let's take another viewer query then. Pooja has been asking that she's been holding Electra at 12 rupees per share. What can be the next target for the couple of next 2 months? Of course, this stock is seeing good momentum from her buying price, 1400. That is where we are at. Nilesh, what is your view on the counter? Because past 1 month, the stock has delivered a stellar performance.
Right, Lovisha, good setup can be seen in Electra, and after recent profit taking that we have seen, looks like the stock is likely to witness another round of uptick. So on the upside, 1600 to 1650 kind of levels can be seen from a near-term perspective. Purely bought it from a short-term perspective, then 1350. First of all, that should be the stop loss for the long position. I think one should stay put, keep a stop loss at 1350. 1500 on immediate basis, and from a near-term perspective, 1600 to 1650 kind of levels can be seen.
Okay, 1600 levels, that is what we can watch out for. Electra Green Tech. Let's take another viewer query on that note. Debu K has been asking the view on SRF. What does the near-term trajectory look like? Because past 1 month, the stock has declined about 8% itself, and today also we can see some pressure, 2% down for the counter.
Chemical pack as a whole, we are witnessing some bit of selling pressure at the high levels. SRF has a weak structure, and we can expect a follow-up move to continue towards 2,900 to 2,850. If bought it purely from a positional perspective, then 2,800 is a very strong support. So ideally, one should keep a stop loss at 2800 and stay put. And from a trading point of view, I think one should exit on pullback because the structure is looking weak from a very short-term perspective.
Okay, all right. Let's take one particular stock, that is your Lupin. After it came out with its June quarter performance, where the net profit is up about 52% on a Y-on-Y basis, and it has beaten what the money control was estimating. Revenue was also up about 12%, a slight miss, but margins that was up about 27.6% from 22.2% from the previous year. But the stock has been exhibiting negative downtrend so far this year. What can we expect the next moves to be, Nilesh? Because today also the stock has been, quite sideways.
See, pharma pack as a whole, amid tariff war concern, is like remain under pressure. So first of all, avoid any sort of a pharma pack, pharma stock as of now, till the time we don't get any clarity. As far as Lupin is concerned, this particular counter has a weak structure. As you can see, if you pull up last 1 year chart, you can clearly see the stock has been in a downtrend, forming a lower top and lower bottom formation. So structure wise looks weak for 1840, 1800 levels on the upside, and till time it doesn't crosses above 2000, the structure is looking weak.
Okay, all right. Let's take another viewer query then. Baiju has been asking whether or not a fresh entry to Crompton Greaves is possible at this price point. Crompton Greaves, what do you believe, Nilesh? Because so far this year the stock has been an underperformer.
Right. So this particular stock is also looking slightly on a weaker side from a short-term to medium-term perspective. The stock is constantly facing resistance at its 200-day long-term moving average, which is currently placed at 350 levels. So it is important for this particular counter to take out that important level on the higher side. The structure is looking slightly sideways to weak. It has a very strong support at 300. If it breaks below the same, then it may drag further towards 280 to 260. So avoid taking any sort of a long position. If already holding, then keep a stick stop loss at 310, and any pullback towards 340, 350, use that pullback to exit.
Okay, any pullback to 343 can be used as an exit for Crompton Greaves. All right, let's take another viewer query on that note. Geetu Sandesh has been asking the view on Shakti Pumps or Sharda Motors, which is the best bet as of now. If you look at Shakti Pumps, past 1 month, the stock has been on a declining trend. But among the two, which one do you believe is a good, better prospect for the near-term trajectory, Nilesh?
See, both the stock, in fact, looking slightly sideways to weak. Shakti Pump, this particular stock, was hovering near about its 200, 100 and 21 DMA. In fact, cluster of resistance now can be seen at 900 level. So till the time it doesn't crosses above 900, the structure is looking weak, and we can expect further downtick towards 750 to 700 going forward. So avoid this particular segment as of now, not looking attractive.
Okay, not looking attractive at this point of time. Let's take another viewer query then. We have Alex asking the view on Triveni Turbines. He's asking what is the long-term support levels that we can watch out for the counter. If you look at so far this year, the stock has been an underperformer. Past 1 month also, it's seen a double-digit decline. Nilesh, what can we expect? Can we expect the pressure to continue?
See, important support from a longer term perspective is currently placed at 466 level. If it breaks below 466, then further downtick towards 400 of 350 cannot be ruled out. So if already bought it, then keep a stick stop loss at 466. And at present, also I think the stock is looking weak from a short term perspective. We did see a gap down opening recently. That's a kind of a breakaway gap that we have seen on the lower side. So structure wise looks weak. Sell on right should be the strategy if bought it purely from a short term perspective. If somebody wants to hold it from a longer term perspective, then 466 should be the stop loss.
Okay, 466 should be the stop loss for Triveni Turbine. Let's take one stock in focus. The stock has been doing well. PB Fintech, 1% down uptake coming in. We did have some CNBC TV 18 exclusive where the company has acquired pensionbazaar.com. And Pension Bazaar is expected to be the wholly owned subsidiary of PB Fintech, and that will be purely focusing on distribution of pension products. So the company will have 3 basic verticals, that is your Policy Bazaar, Paisa Bazaar and Pension Bazaar. Today the stock is doing well, 1% uptick coming in for the counter, and the stock has been, however, on a downward spiral by past 1 month. Nilesh, what can we expect on the counter going ahead?
See, as of now, the counter is moving sideways, no clear trend on the chart as of now. But good part is that the stock is taking support at its long-term 200-day moving average as well as 100 EMA support. Both are exactly placed in the range of 1720 to 1740. So it is near about those levels. So risk and reward perspective looks positive. There could be possibility of a pullback towards 1850 to 1900. One should keep a stop loss at 1720. If it breaks below 1720, then there could be possibility of a further drag towards 1600 to 1550. But as of now, fresh longs can be taken with a stop loss below 1720. And if somebody is already holding the long position, can continue to stay put for a pullback expectation towards 1850 to 1900.
Okay, 1800 to 1900. Let's take one stock in focus, that is your Prestige Estates. The stock has been not doing well on the back of its Q1 results, where we saw that the net profit was down about 25% on a Y-on-Y basis. However, the top line saw double-digit growth. Margins also saw a contraction with about 38% compared to 42% from the last year quarter. But the stock has been consolidating between that 1600 to about 1650 range past few months. Today also the stock is down. Nilesh, what can the next moves be for the counter?
See, Lovisha, as mentioned, that realty pack as a whole is going through some bit of a correction, and Prestige State is also looking slightly on a weaker side from a short-term perspective. 1500 is a very strong support. If it breaks below the same, then we can expect further downtick towards 1400 to 1300. But as of now, it is near about its multi-week support zone of 1580. So that's the immediate support from a short-term perspective. And if at all we see any pullback towards 1700, 1750, that's the level where we might see supply coming in. So it's an avoid taking any contract at present level. Better wait for some bit of trend reversal in this particular sector.
Okay, all right. Let's also take, a stock which will be reporting its Q1 results today. That is your Bajaj Auto, where we expect some muted domestic sales and the margin pressure is expected to continue. But according to Money Control poll estimates, the net profit is projected to see a marginal increase of about 1.4% and revenue also seeing a modest low single-digit increase from a Y-on-Y perspective. So yes, Bajaj Auto not doing well for today. But yes, from a near-term perspective, how does the stock look like, Nilesh?
Right, Lovisha is not performing. Not only today, in fact, if you see last 1 year, it has been one of the underperformer. Within two-wheeler pack as well, if you see TVS Motor, which is trading at all-time high, Bajaj Auto still struggling to cross its 200-day moving average, which is currently placed at 8,400. So ideally, one should wait for a breakout above 8,400 before buying this counter. It's an avoid at current price because the stock is facing a constant resistance at the high level. So not looking that attractive, but after result, one can look at this particular counter and ideally it should break 8,400, then only it's a buy. Otherwise, it's an avoid.
Okay, all right. Let's take another auto stock in focus. That is your Hero MotoCorp, because that will also be reporting its June quarter performance today, where we're expecting that, it'll see a 3.7% year-on-year decline in its revenue, and net profit is also expected to see a downtick of about 6% on a Y-on-Y basis. That's what the Money Control poll estimates have been. The stock is down ahead of its Q1 results, but for the past 1 month, the stock saw an increase of about 4% itself. Nilesh, what can we expect on the counter going ahead? Because the July sales data was encouraging, but right now the stock is down ahead of its June quarter performance.
Well, Lovisha, comparatively, this particular counter is better placed compared to Bajaj Auto. Reason being, recently we have seen a good breakout in this particular counter. It is trading well above its long-term 200 DMA, as well as a breakout, multi-month breakout was seen at the level of 4,350. So, first of all, the stop loss for the long position should be placed at 4,350, and we can expect a gradual up move towards 4,700 to 5,000 going forward. So, it's a buy on decline, not at current level, keeping a stop loss below 4,350.
Okay, 4,350. Let's take another, stock in focus. That is your, we'll watch out for this, another viewer query as well. Geetu Sandesh has been asking on Alcoagont FinTech for the near-term trajectory. Alcoagont FinTech, any views on the counter, Nilesh?
No, Lovisha, I don't track this particular counter.
All right. Just one last question before we let you go, Nilesh. Any topics that you're watching out for in this session? We're seeing a little bit of a consolidation and tariff uncertainty, and then we have RBI policy outcome itself. Anything that we should be watching out for going ahead?
Right. We have a couple of buy recommendation. Although we are witnessing a selling pressure in the major indices, but stock specific action, as mentioned, it is likely to continue. So first of all, L&T, this particular large cap stock is looking positive. Recently, we have seen a good gap up opening, and that particular gap area has acted as a very strong support. So now the stop loss for the long should be placed at 3600. We are expecting a follow-up move on the upside towards 3720, followed by 3800. So these are the two target on the upside, 3720 and 3800. Apart from that, Newgen, this the one of the cash counter that is also looking positive. Yesterday we have seen a big up move in this particular counter. Today we are witnessing a follow-up move. So with a stop loss below 945, Newgen can also be bought from a short-term trading perspective for upside target of 1000 and 1030.
All right. All right. With that, we have to go. I'll let you go, Nilesh, but thank you so much for your time and joining us.
Thank you, Lovisha.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at Sensex and Nifty, both of them are trading quite sideways. Nifty still below that 24,650 levels at this point of time. India Wix, that remains on a higher end, but still sub about 12 odd levels. If you look at the mid-cap and small-cap indices, no major participation coming in from there too. Mid-caps down about 0.5%, mid-caps or small-caps also down about with a 0.5% cut. On the other hand, if you look at some of the rate-sensitive sectors going ahead of the RBI policy outcome, Nifty Auto down with about 0.4% decline. Then we have Nifty Realty also, quite not doing well in today's trading session, and Bank Nifty, however, also with about slim gains, but with a positive bias. But with that, let's quickly move on to our next guest of the show. We have Devarsh Vakil, Head of Prime Research at HDFC Securities, joining us. Devarsh, good morning. From Trump's dead economy statement to planning to raise 25% tariffs on India in the next 24 hours. How do you see this playing on India's markets and, of course, the risk of sentiment? Do you expect this to be present ahead of the August 7th deadline tomorrow?
Yeah, good morning. Thank you for having me on the show. So, yes, see, the Indian markets have actually done quite well over the last, from the April lows. And Nifty advanced, mid cap and small cap indices have also done remarkably well. So this Trump's yesterday's new tweet and recent threats of imposing the new tariffs on India. In fact, yesterday he also mentioned pharmaceutical sector. This has unsettled some investors, and it has created some more policy uncertainty. US economic data, if you see, the ISM servicing data which came yesterday also missed some forecast. So obviously these are raising fresh concerns about the economic momentum in the US economy as well as the economic slowdown in the Indian economy. But overall, I think following the sharp rally of the past few months, we believe that this is now a consolidation phase rather than a major correction. This sideways movement is actually very healthy for the market. It is basically allowing the market participants to digest the recent gains. Looking ahead, I think earnings growth will drive the market, and we expect significant acceleration as Nifty earnings were very muted last year. Now this year we expect double-digit growth, and starting from next quarter on the back of a good monsoon and the growth which we are going to see based on the capex which has been done. I think this opportunity is basically a chance to accumulate good quality stocks. We expect strong earnings recovery ahead.
Okay, strong earnings recovery ahead. That's what you're expecting. But Devarsh, let's once again talk about that. The exports to the US is something insignificant that everyone has been saying. But Trump has also been talking about punishing India for buying Russian energy. So if that equation has to be considered, what is the kind of impact that India should be watching out for? Because right now we are still below that RBI's tolerance level of inflation band.
Right. So that the undefined penalty as of now on India importing the crude oil from Russia is going to be a major issue. The global supply chain, actually Russia could be one of the major suppliers, and it could lead to rising global oil prices. It can stroke global inflation. So that is something very significant and credible threat, and we have to watch out for that. Although yesterday's television interaction of President Trump with their journalist, I could we could perceive that there is some softening in that stance as well. But obviously, that remains a joker in the pack. If it is an insignificant duty of 1 or 2% penalty, then it is digestible. But if it is a larger number, which may come in future, then it will create an issue. Our perception is that the US delegation, which is likely to visit India in the later half of this month, these negotiation tactics will pave way to eventual deal, and we should be able to sail through this period. So yes, it is a clearly a threat, but at this point of time, we just have to wait and watch what actually comes out of these penalties.
Okay. What is the tariffs that you have been working with? So we are at 25%. Do you expect a climb down from there?
Yeah, so clearly this is basically a negotiation tactics which they have been indulging. So our expectation is that eventually there will be a trade deal between India and US, and the duties will be brought down. The negotiation position is basically this is what they did with Japan also, where they first put a higher duty and ultimately settled at a reduced rate. The ultimate implementation and the overtures are actually a little bit concerning, because earlier Trump position was giving India strategic priority compared to China, but now he seems to be doing the reverse. So fundamentally, I expect that this is a negotiation technique, and eventually it will be brought down. And even if we say assume that there is a 20% tariff on India's good, prima facie, that represents about 25 basis point to 30 basis point risk to the India's GDP growth. So it is not that significant. Given the export elasticity and the India's overall export to US, it is not a major concern on the economic growth for per se, but obviously it is one of the worries which is pinning the markets down and the valuation down. So as soon as the resolution of this trade war happens, that should be the one of the triggers for market to start moving higher.
Okay. Devarsh, and in this subdued market, everyone talks about, how defensives are something that we should be watching out for. But Nifty Pharma Index, if you look at that, that has seen a little bit of a pressure after the 25% tariffs that he has announced. But he has not mentioned anything about, that the pharma pack will be subject to any of those tariffs. But at this point of time, are you avoiding pharma or how are you positioned there?
So pharma companies, overall, the companies have reported strong numbers for the quarter, and that was actually led by the niche opportunity in the US market. The earlier the struggle with the sector was that there was a price erosion in the US business, but that has now come down to single digit. US president has been talking about an executive order where he was going to put a duty on prescription drug, and he wants to bring that cost down. He may implement something called a most favored nation price model, where some countries, drugs coming from those countries may not impact the duties, but others may actually get impacted to higher duties. In our coverage, we have been actually bullish on the domestic formulation business, because there we have seen the steady growth, about 8 to 14% growth we have seen in various therapeutical areas, various brands. And in fact, within the pharmaceutical, the IPM business, the chronic area has been leading the market. So we think that the local players like Torrent Pharma, Dr. Reddy's, businesses of Lupin or Sun Pharma for the local, that continue to grow, and we remain positive on some of the larger and smaller stocks like Sun Pharma, Lupin, and mid-caps like Ipca Labs and FDC in that sector.
Okay. All right. Yeah, you did say that, the earnings recovery could be possible from the second half of this year itself. But so far, how are you assessing from the India Inc? How do the valuations look at this point? Do you believe that it is justified given the earnings we have had so far? Or do you see any change in the earnings growth projections for FY26?
So, at the beginning of this earnings season, we were expecting about 12% kind of a growth for FY26 for the Nifty aggregate earnings. Obviously, the when you average or aggregates, that actually hides more than it reveals. So, within the 50 stocks, there are some stocks which are growing quite well and where others are struggling. But overall, at the aggregate level, we are expecting about 10 to 12% growth, and that's what we have seen till now. This is significant acceleration over the last years where we had a very subdued earnings. So that way, we are actually quite bullish on the earnings growth front. The trigger for the earnings growth front would be come from the capacity utilization, which is increasing every month now, and obviously the lower cost of capital. So starting today, we will see as we are going to see RBI's MPC policy, and we expect that because of the these Trump threats and the lower inflation, RBI will have a accommodative stance. It may also announce a 25 basis point interest rate cut. And obviously, we are expecting that the because of the US Donald Trump's pressure and other tactics, US may also start cutting interest rates. So these things will improve the expected interest rate cut, will impact the liquidity. Domestic economy will be shielded from this global trade disruption, and that should help earnings to recover. And that's why we are expecting that the second half, in fact, from next quarter and going forward, we are expecting earnings to recover. Obviously, the monsoon, which has been fantastic this year, geographically, spread wise also, and the amount wise also. It looks like that we are headed for a higher earnings going forward.
Okay, okay. Devarsh, then you expect a 25 basis points rate cut in this meeting. Any projections for the remainder of the calendar year?
So, what RBI under this new governor, they have been actually front loading the rate cut. So as soon as Governor Sanjay Malhotra took over, he cut CRR. He gave a jumbo rate cut, which was little higher than the market expectation. Even after this potential global economic slowdown because of the US reciprocal tariffs, I expect that they will there is a room for them because of the softer inflation data and overall moderate demand. They can actually front load the rate cuts, and they may announce a rate cut based policy, or if they not announce a 25 basis point rate cut, they will be a very dovish statement and very accommodative stance, and that will that will give a signal to the market that RBI is going to provide liquidity, and that will set the tone for markets to recover from here.
Okay, okay. There was just one last question before we let you go. You did mention that the earnings growth projection for FY26 is about 12% that earlier you worked with. But right now, it's going to be about within that 10 to 12% band. So the lower earnings growth projections, so do you expect that the earnings downgrade cycle is expected to continue then?
I think we are at the cusp of the end of this downgrade. We have passed through soft earning patch for the last couple of quarters. I don't expect much downgrades from here. The earnings from the IT pack has also bottomed out. There were some concerns about the banking sector, but IT and banking, as you know, are the two large weights in the indices, and there the asset quality on the banking side has also more or less stabilized. The shocks of MFI and other segments are have run its course. So going forward, I don't expect major downgrades in the earning, and we expect recovery to set in from the next quarter.
Okay, all right, all right. All right, Devarsh, with that we have to let you go, but thank you so much for your time, and we hope that we connect with you soon.
Thank you for having me on the show.
Thank you. All right, let's take a quick check of the markets. Both Sensex and Nifty, the headline indices, continue to remain under pressure. Nifty below that 24,650 mark, hoping that, there would be some dovish commentary coming in from the RBI itself. So we'll watch out how that next 10 minutes of the markets pan out as well. But yes, if you look at some of the sectoral indices, Bank Nifty continues to remain sideways with about flat to positive bias. Nifty Realty down with about 0.3% decline, and Nifty Auto Index also with about 4.4% declines. Mid cap, small cap indices, both of them remain at depressed levels. But yes, we'll be watching out in just 10 minutes or so Governor Sanjay Malhotra's comments on how the RBI, repo rate is going to look like for the remainder of the year, and of course for this meeting itself. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.